Welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is November 19th, 2025, and we're taking a deep dive into one of the most watched stocks in the world, Apple, ticker symbol Apple. There's a lot of conflicting information in the news right now, creating a confusing picture for investors. On one hand, Apple's recent fiscal results showed strong year-over-year revenue growth and record-breaking iPhone sales, which is fundamentally very bullish. However, looking back at their late October earnings report, we also saw that sales in China missed expectations, a significant point of concern for future growth. This mixed bag is reflected in analyst ratings as well. For instance, Barclays recently raised its price target on Apple to $230, but, in a very contradictory move, maintained a sell rating on the stock. Adding to the bearish sentiment, there are reports that hedge funds have been trimming their positions in the tech giant. There are also lingering concerns about Apple's AI strategy and how it stacks up against competitors. So we have this classic tug-of-war, strong performance metrics pulling one way and cautious forward-looking sentiment pulling the other. Let's turn to the charts to see how this complex narrative is being translated into price action and what it could mean for traders and investors. Looking at the daily chart, which shows us the price action over the past year and a half, the long-term trend is undeniably upwards. We can see a pattern of higher highs and higher lows, though it's been a very volatile ride. The stock made a significant new all-time high in late October, reaching up to the $277 level before pulling back. This establishes a clear psychological and technical resistance level right around $275 to $277. Any move back to this area will be a major test for the bulls. Looking down, we can identify several key areas of support. The most recent major support formed around the $245 level during the October sell-off. Before that, the $225 to $230 zone acted as a very strong floor for the price, holding firm through August and September. This $225 to $230 area is a critical long-term support level to watch if we see a deeper correction. We also can't ignore the massive drop and V-shaped recovery we saw back in April 2025. The price plunged from around $225 all the way down to the $170s before an explosive recovery. Notice the enormous volume on that recovery day on April 9th, which signaled a major capitulation of sellers and a powerful entry of buyers. This event established the $170 to $180 range as the ultimate bear market support for now. Currently, the price is consolidating after its recent all-time high, trading just below the $270 level. Let's zoom in on the action since the beginning of October to get a clearer picture of the current setup. We can see the powerful rally that began in mid-October, taking the stock from $245 all the way to $277 in just a couple of weeks. This peak on October 30th coincided with their earnings announcement. However, look at the candle on October 31st. It's a large red candle that erased a good portion of the previous day's gains. This is a classic sell the news reaction, likely driven by those concerns over sales in China. Since that peak, the price has been unable to reclaim those highs. The month of November has been characterized by consolidation and a slight downward drift, with price action largely contained between $265 and $275. The last two trading sessions, November 17th and 18th, both closed lower, showing rejection at the $270 level. This suggests that sellers are currently in control in the very short term. Now let's switch to the 1-hour chart to analyze the short-term structure more closely. On this time frame, the recent downtrend is much clearer. We can draw a descending trend line connecting the highs from November 11th around $275 and subsequent lower highs. The price has been consistently failing to make new highs, indicating short-term bearish momentum. On the support side, the price has found a temporary floor around the $265 to $267 area. This zone has been tested multiple times in the past week and has held so far. Right now, the price is sitting right on top of this critical short-term support. This is a decision point for the stock. A bounce from here could see it challenge the descending trend line again, while a break below could lead to a faster move down. For an even more granular view, let's look at the 15-minute chart for the last 2 days of trading. Here we can see the battle between buyers and sellers playing out in real time. On November 17th, the price gapped down slightly and then sold off steadily throughout the day, falling from near $270 to find a bottom around $266. Yesterday, November 18th, saw an initial attempt to rally back, but the buying pressure quickly faded. The stock then bled lower for the rest of the session, closing near its lows for the day around $267. This intraday price action confirms the weakness we saw on the daily and hourly charts. There's a clear lack of conviction from buyers at these levels, with every small rally being sold into. This puts immediate pressure on that $265 to $267 support zone. Let's pull back to the daily chart to put it all together. The long-term trend is bullish, but the short-term momentum is bearish, and the stock is at a critical inflection point. Let's recap the most important price levels you need to be watching. The key resistance to break for the bulls is the recent all-time high zone of $275 to $277. Before that, it needs to reclaim the minor resistance at the psychological $270 level. On the downside, the immediate support is the recent low around $265. If that level breaks, the next major support area is between $245 and $250, which was the low from October. Beneath that, the ultimate line in the sand for this uptrend is the multi-month support base around $225 to $230. Now for some potential scenarios, keeping in mind these are just probabilities. I believe there's a 60% chance for a bullish continuation. In this scenario, the stock would need to hold this $265 support level and reclaim $270 with a noticeable increase in buying volume. This outcome would be reinforced by positive news, perhaps clarifying their AI plans or a broader market rally, and would target a retest of the $277 highs. On the other hand, there's about a 40% chance of a bearish breakdown from here. This would involve a decisive close below $265 on strong volume. This would open the door for a drop to the $245 to $250 support zone. This scenario becomes more likely if we see continued negative headlines or sustained weakness in the overall tech sector. The main thing to watch for is volume. Any break of these key levels needs volume confirmation. Alright, that's our deep dive into Apple stock for today. Remember, this content is for educational and informational purposes only and should not be considered financial advice. Trading and investing involve significant risk, and you should always conduct your own thorough research. Consider consulting with a certified financial advisor before making any investment decisions. Thanks for watching Explain the Charts. Don't forget to like and subscribe, and we'll see you in the next analysis.